Cashflow Diary Podcast, episode 135.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, and welcome to another episode of the Cashflow Diary Podcast. I'm your host, Jay Massey, and guess what, guys? We are going to talk about something, again, that we have not talked about in a little minute. Here's the thing. Many of you know that there's so many different ways to create cash flow, and we do our best to go out there and find some of the biggest, baddest, brightest entrepreneurs we can find that are out there making things happen. One of the things that I often think that we forget about is just because we're out there to build our businesses and create cash flow, et cetera, that doesn't mean that we have to only do it, quote unquote, for the money, but we can also do well and do good simultaneously. And I think there are so many limiting beliefs that we have out there that tend to stop us. We think we're too old, too young, too this. And I think today's guest is absolutely going to blow your mind. Today's guest is none other than Peter Harris. He's the manager of University Venture Fund, an $18 million venture capital fund designed to give university students the opportunity to evaluate and invest in high-growth startups alongside other seasoned investors. That is one of the best things I have heard in a long time. It's kind of like on-the-job training, but for real at the same time at the university level. I love it. Now, hear this, though. Peter is also passionate about using business as a tool to achieve sustainable poverty alleviation. Now, we're going to unpack what that means, but at the end of the day, it means he likes the idea of doing well and doing good at the same time. And he's been able to do his good work across many different countries, including Africa as well as Latin America. Let's find out about Mr. Peter Harris. Peter, you there?
Yep, I'm here.
Excellent. Glad that you could make some time to be here today. Now, many people know what my first question is going to be. You probably know. And I just, because I got it, we always have to ask. You know, I look at today's entrepreneurs like yesterday's superheroes, whether that be the Flash or Superman or whoever, Batman that you like. But all of those individuals had a backstory. They had a beginning. They have an origin. Something happened to them, and then they decided to do something about it. What I would love to know is before you were flying around the world, literally, and helping individuals in foreign countries as well as managing a venture fund, who is Peter Harris?
That's a good question. So, I mean, you've kind of alluded to the fact that I've got a lot of stuff that I do. I think kind of my background was, I've been highly influenced by my dad. He's a computer engineer by training and worked at Lockheed Martin, a really big defense contractor, and kind of a fairly prestigious job for an engineer. And growing up, I always thought, I want to be an engineer just like my dad. And really, I mean, you talk about superheroes. He was kind of one of my superheroes. And when I was in high school, he actually decided that he didn't really enjoy being an engineer at a large company and decided to go off and start doing some real estate investing. And we got me reading some of Richard Kiyosaki's books and so on and so forth. And so I got really involved with him, and that kind of totally changed my mindset from wanting to be an engineer, which there's nothing wrong with being an engineer. I have a ton of respect for engineers, but to deciding I want to be an entrepreneur and doing a lot of real estate investing with him. And then from there, once I graduated high school, I actually spent a couple of years in Spain and doing a service mission for my church. And while I was there, I would meet a lot of these people that were in pretty bad situations financially. And, I look at my experience doing real estate investing and other entrepreneurial type things with my parents, and then look at these people and think there's got to be a way to use business to kind of solve some of these needs. And so when I got back from Spain, I got involved with a professor at BYU where I was going to school, and that was doing this new business model to alleviate poverty, to address poverty in developing countries, called microfranchising, and it just really resonated with me because, again, I wanted to use my experience of entrepreneurship to help these less people that were in less fortunate situations. So that's kind of how I got involved in kind of some of the doing well by doing good stuff. Well, at the same time, when I was in school, going back to this idea of I wanted to be an entrepreneur, I was in the process of starting a company that was essentially the very same thing as Redbox. And I was in discussions with a guy that owned a ton of Little Caesars franchises. And so I was working hard to build these like boxes and push them out to all these franchise locations. And my thought was, pizza and a movie for $6 would be a cool business. So I was working on that and in talks with him, and Redbox announced that not only had they raised hundreds of millions of dollars in venture funding, but that Utah was going to be their test market.
Nice.
And I realized at that point that I probably couldn't compete.
Yeah, okay. I got you. But you didn't quit.
No, so I mean, what I decided, well, what I found out about was this new fund at University Venture Fund that my friend told me about, and he said, you got to check this out. It's really interesting. And so I kind of shut down that other business and kind of refocused my efforts on the new fund, the new opportunity. So I got involved with University Venture Fund as a student when I was at BYU. And the whole program of the University Venture Fund is designed to give students, like you said, this opportunity to make venture capital investments, which, to be frank, is just not an opportunity that most people will ever have, let alone students. And the program is very much designed to be student run. So I got involved right after I came on. We brought on a new managing director, and he and I worked closely to revamp soup to nuts our entire program. So, how do we think about training and recruiting and mentoring students, but also how do we think about sourcing investment opportunities and doing the due diligence and making good investments? And so, I did such a good job there, essentially, and I was having so much fun that when I graduated, he offered me a position to come on as a full-time manager and keep managing the fund. And I've been there ever since. So
nice. I love it. One of my favorite things about what it is that we get to do as entrepreneurs is, yes, as you mentioned, we solve problems. And obviously, as a real estate investor, we solve two problems. We provide jobs and housing, but it's not limited to that. It's limited in essence by your imagination, as you were saying. You came up with the idea of a pizza and a movie for $6. You know what? I think there are a number of college students who would probably agree with you for sure. But you got to get to market at the same time. One of the interesting things that you've mentioned that I don't think anyone else has mentioned thus far is the influence that your parents have had on you. And I guess my question would become, how important, like, for example, do you think that is, that whole environment of how you grew up shaping the idea that this or these things are now possible for you?
No, I think it's super important. And I feel very fortunate in that my parents are pretty entrepreneurial. My dad is now the CEO of a nutraceutical company, and my mom, she's an attorney. She left, this big swanky law firm to start her own practice. She does bankruptcy law, and her firm is the largest bankruptcy firm in upstate New York. So, but I mean, those are very entrepreneurial type things to do. And I think being able to see them and their willingness to take risks and not afraid to fail and kind of push in those new directions gave me kind of the courage that, yeah, it could be done. And, I didn't have to go through a traditional route to achieve kind of the things I wanted to do.
And indeed. And I like that idea, especially what you mentioned when you say you're not afraid to fail. I think that's one of the things that stops too many of us from actually trying to dare greatly or do something that would be great. Now, one of the things that you've said that I don't know if enough of us even understand is this concept of micro franchising. Help us understand what that is.
Sure. So micro franchising, I mean, I think most people are familiar with a franchise, right? So franchise, like McDonald's, they've got a really strong brand everybody recognizes. They've got strong marketing and advertising. They have strong systems and training, and even product supply. So when you go to McDonald's, you know exactly what you're going to get. And the value that they provide there really isn't making a really good burger. I mean, I think we can all agree you can get better burgers elsewhere. But the value is that we all know what McDonald's does, what they provide, and we get a very similar, if not exactly the same experience every time we go. So we take all of those same things and we bundle them up into a package designed for an individual living in a developing country or market. So what do I mean by that? So for example, I've worked on helping launch a micro franchise that sells chicken products in Kenya, in Nairobi. And what we did is we went to a large chicken company and worked with them to develop a product that girls in the slums could sell in their area. So they wear a uniform, they have a branded cart, they sell a very specific set of products that's provided by one supplier. They receive quite a bit of training on not only how to sell, but also how to operate their business, how to keep their books, how to allocate resources, those kinds of things. And then we provide additional support and training through management staff that help them out. But at the end of the day, it's their business. So they're responsible to go out and sell, and they capture the profits and the proceeds of their labors, which is kind of works out in this really interesting win-win where the chicken company now has access to this whole new market it never had access to in these slums. And a lot of people might say, well, the slums aren't a really interesting market, but I would disagree. I mean, there's a lot of transactions that happen in these areas, and then there is quite a bit of money flowing there. So it opens up this whole new market for them. And for the girls, you've now stripped away a lot of this entrepreneurial burden of, well, I got to go figure out what I'm going to sell, who I'm going to sell it from, how I'm going to price it, how I'm going to market it, how I'm going to operate my business. You can solve a lot of those issues for them and reduce that risk, which for these girls or these people in these markets is crucial because, you and I can take risks and recover fairly quickly from them because of, the benefits of where we live and so forth. But for some of these people, if they don't sell something that day, they don't eat that day. And that can have devastating consequences, not only on them, but also on their children. So we think it's a really cool model. It's obviously not for everybody, but there is kind of this group of people that could really use the help, and we can really kind of de-risk the challenge of being an entrepreneur in these areas.
Right. I've said it before. No one has a money problem. You have an idea problem. And when you begin to use these ideas to go out there into the marketplace, you have this ability to create and solve your own problem. And in this particular case, you've solved someone else's problem for them, because that's what entrepreneurs do. But at the same time, they still have to take that ownership and responsibility. I love it a whole ton. Now, where does an idea like that come from? Where do you get up the courage to say, hey, Mr. Chicken Manufacturer, I need your money and systems and chicken to go do this? How does that even begin to germinate in one's mind?
So, our process that we go through is we do a kind of a market assessment. And really, that's just a lot of going and talking to people in the market where we want to be operating and selling. What are their needs? What do they buy? What do they not buy? What do they wish they could buy? Those kinds of things. And we pay a really close attention, not to what they say so much as what they do, right? So you'll meet, we meet with people and they say, oh, I never buy, kind of that nicer end food. And then, we'll walk by their trash can and kind of dig through it a little bit. And sure enough, there's labels and packaging from that kind of food. And so, we can see what they're actually consuming, what they're actually doing. And that gives us a really good insight into different products that could be sold. And then we kind of bundle up all of our research based on what we're seeing. And we go and talk to different companies, larger companies that provide those types of products or services, or that could provide those types of products or services. And the pitch is just, with this chicken company, for example, they had a couple of franchise locations like a McDonald's, and I just went in and talked to the manager and said, hey, I want to talk to your manager, your franchise manager. And he gave me her number, and I called her up and took her to lunch and pitched her on this idea of, hey, look, let's do good by do well by doing good in these slums and open up this whole new market for you. And that tends to really resonate with entrepreneurs, because I think like yourself, they think it's a really cool idea, but they also see that it can be sustainable and drive additional revenue for the company. So a lot of it is going up and kind of forcing your networking. But I mean, people are always. I've found that most people are generally interested in chatting and talking about new ideas, especially if they're entrepreneurial.
Right. Now, you bring up a subject that might scare a few people. You said forcing your networking. I know for myself, I'm naturally, and people still have a challenge believing this, but naturally I'm an introverted person, so it's not exactly like, hey, let's go meet 200 people today. That's rarely on my list. So, how does one become that person in that sense? How did you learn to force your networking? Because that's clearly, if I'm going to be in business, I'm going to have to deal with people. And most importantly, people I don't know. Mom called them strangers and said, don't talk to them. But now I've got to talk to strangers. So help me out, Peter. What are we going to do?
Sure. No, I mean, and I can totally resonate with you in that I also am pretty introverted. I don't like, cocktail parties and going and with, everybody there and kind of going outside my comfort zone. But what I found for me, I think to a certain extent, everybody's got to think about their strengths and what's going to work best for them. For me, I tend to be very strategic in my networking. So, for example, with that chicken company, I knew I wanted to work with them. And I just thought about what are the different ways that I can get in touch with somebody that can work with me and that's a decision maker. And I was fully prepared to go to all of the franchise locations I had to before I got her number. It just so happened that the first one, I kind of walked in and I said, hey, I'm interested in doing business with you guys. Can you put me in touch with your manager? And the guy was more than happy to connect me. But I found that, oftentimes if you're strategic in how you're thinking about it, approaching these people, you can often get in touch with just about anybody. So it's a matter of finding and thinking about, how do I get to the person I want to talk to? And what value can I add to them? And what value can I add to all the people along the way that I need to work with to get to them? So another example is there was a really interesting company here in Utah that was raising capital that I wanted to invest in. And I kind of looked through my existing network to find people that were connected to that company. And through 3 different introductions where I just said, hey, I'm really interested in meeting this person. Would you be willing to make an introduction? They helped me eventually network directly to the CEO. we took him to lunch. We pitched him on who we were as an investment firm, and he carved us out a piece of the capital he was raising. And that's to date been one of our top performing investments. So it was a matter of like not just sitting there waiting for the opportunities to come to me, or just taking a token effort of sending him a cold email, but really thinking, okay, if I want to meet with him, I need to have a good introduction from somebody that he cares about. How do I get that person to care, right? And then working step by step to get the right introduction into him.
Absolutely. Well, and I love what you just said about not taking something more than just a token effort of sending a cold email, because I'm sure there's at least one person listening right now who said, yeah, I did that email. That's exactly what I did. Oh, now they know what they should have done instead in order to actually make something happen. So let's talk about this idea of investing in companies as the asset class and how to make that work. When you're out there, everybody, it seems like, has an idea. I mean, with the proliferation of shows like Shark Tank, right? You've got ideas everywhere. And how on earth do you even begin to go, let's go find a deal? How does that work?
So there are a lot of different ways that we approach it. And we're a little unique in that we like to co-invest alongside other investors. So I'll speak a little more broadly in terms of how the kind of typical fund goes after deals. We look at two different things. So one is there's stuff that comes to us, right? And typically the more early you are in your company, right, the smaller it is and everything else, the more active you're going to need to be in terms of meeting people, networking, and trying to raise capital. So there's a lot of kind of inbound stuff that we'll look at. And then there's a lot of outbound work that we do as well. So as the company gets more and more successful, they've got some unique twist on their product or market, or they've got some really great traction, we'll try to pay attention to those types of companies and reach out to them and find ways to meet and hear their story. And for us, we're pretty generalist in our investing. So we look at, pretty much anything we think is interesting in terms of like it's growing or it's got kind of this unique spin on the market. They've got a proprietary product or what have you. But other funds, are very specific in terms of we do software technology investing, right? And that's all they do. And they will go and think about, there's this new market that we see is going to happen, and we want to understand every company operating in that market, and we're going to put a bet on the one we think is going to win, right? And so they'll do that and be very kind of strategic in the types of investing that they do and the companies they go after.
So if I'm an entrepreneur, hypothetically speaking, of course, right? If I'm an entrepreneur and I'm going out there to seek capital, I'm looking for individuals like yourself. What is it that I need to make sure I bring to the table? And more importantly, what's the one thing I need to make sure I don't do so that you and I can figure this thing out and make our ideas happen?
Sure. So, I think one of the most interesting things that's happened over the last decade is the ease of starting a business. Even a technology company today doesn't require hardly any upfront capital, right? I mean, it's like you said earlier, it's not a money problem; it's an idea problem and a confidence problem, maybe, of just going out and doing it. And so, if what I love to see in entrepreneurs that I meet with is ones that have just gone out and done it. They may not have millions of dollars in revenue, but they've scrapped together a product. They've found somebody that really wants it, a market, and they've got some initial traction that shows that they figured out a real need in the market. And no, their product is not beautiful, and it doesn't have all the features that they wish it had, but it has the core value that customers want and are willing to pay for. And at that point, then it becomes really easy for me to look at it and say, yeah, if I give this entrepreneur more capital, they're going to be able to, flesh out their product and really take it to a broader market and get it in front of more of these types of customers that it's already resonating with, and really build their business. And so those are the kinds of things I'm looking for. In terms of the things, the one thing not to do.
That thing you've seen so many times, you're like, oh God, here we go. Yeah, that.
I think I would kind of boil it down to getting advice from what I would call legitimate investors or mentors. What I've seen over the years is that there are kind of two sides of the house. There's one side of, what I would call legitimate investors, in that, they're very professional, they manage funds, or they've sold their company at a very high multiple, and they're now an angel investor. They're people that are really sharp and do a really good job. And then there are kind of a more fly by night, make promises, but you can't really ever nail these people down in terms of what they've done or how much money they've, and I'm not an exact dollar number, but know for sure that they've actually made as much as they seem to say that they've made. And I've seen a lot of entrepreneurs fall in the trap of getting involved with those types of people. And ultimately the problem is that they get bad advice, they get bad terms on their investments that they take. And it can actually be really damaging if their company does grow and is successful. So I guess at the end of the day, I would just be very careful about the types of mentors you have, but also get a really good mentor, because they can be the difference between success or not.
Yeah, you could say that again, in so many different ways, because in theory, the mentor has been there. They have done that. They have already made the mistake that you're about to make, and they have the ability to steer you from it. Speaking of mistakes, I'm assuming you don't, like most people, we don't have a perfect track record. I would love to hear of what you would call one of your greatest, most epic failures thus far.
Are you tired of letting good cash flow generating ideas go to waste? Go to cashflowdiary.com/ready to apply for a complimentary, yes, that means free, one-on-one breakthrough session. Take action now. Go to cashflowdiary.com/ready. Again, that's cashflowdiary.com/ready. Before we get back to today's episode of the Cashflow Diary podcast, your host, Jay Massey, has some important insights to share with you.
All right. So here's the question. Have you considered yourself like perfect ever? And you understand that I ask these questions of the guests so that you can see that nobody is. Making mistakes is part of the path. That's it. People say they want to avoid failure, then you might as well say you want to avoid success, because the only people I know who are quote unquote successful have failed, and that failure came first before their current apparent success. Just keep that in mind. In fact, before we get over to some of the failings of our guest, if you'd like, you can pick up my failings absolutely free, because we are now, what we're doing is, for those of you listening, you have the ability to go to cashflowdiarybook.com, cashflowdiarybook.com. You can pick up a physical copy of the book, absolutely nothing. I'll pay for the book, you paid for the shipping, and we'll send it to you, again, worldwide, wherever you want it to go. We'll put it there, and so that you don't have to wait to begin to consume the information, I'm even going to give you the ebook version as well. So the ebook will get delivered to you immediately, so that way you'll have it. Just go over to cashflowdiarybook.com and we'll kind of go from there. Talk to you soon. Let's get to the rest of it.
I would probably say one of my worst investments was one that I made actually when I was in high school, really early on. So I was doing a lot of real estate investing with my parents, and my job was essentially go out and source deals. So I would pull up the tax record, or the tax auction records, and go and hunt down properties that were going to be on the block, the auction block, and evaluate them. And we bought through that process, I found and we bought this old schoolhouse that I thought, and this was a great lesson for me because I just kind of got emotional in the deal. It was this school that had been built in, the early turn of the century. It had a huge bell tower. I mean, this thing was really cool and pretty big. And it had been turned into an apartment, but then it kind of fallen in disrepair. And so it really needed to be remodeled and a lot of work done to it. And we got it for a screaming deal. I mean, I think we paid like maybe $50,000 for it. But I just thought, this is such a cool building. We got to get it, and we got to, do whatever. And it turned out that because I had been so emotional on it, I totally disregarded the fact that there was like no market, like there's a military base nearby that was contracting. The whole thing would have required, had some foundation issues, some structural issues. It was going to cost, at least $100,000 to get it anywhere close to being rentable. And, we ended up selling it at a fairly significant loss. I think we sold it for like $15,000 or something just to get rid of it and move on. But, it's not like a huge, massive loss, but I remember like being so excited and then so devastated when it just kind of fell apart and the mistakes I made there.
Well, it brings up an interesting subject. I mean, most of our learning lessons, that's what we'll call them, do. As an entrepreneur, wouldn't that, I'm assuming you've seen that same thing with individuals who have come to you looking for investments or et cetera, where they're in that same situation. They're all emotional about what it is. Their new precious toy that they just created. And most importantly, the size of the market or the fact that it's even viable.
Yeah, no, I totally agree. I'm a huge fan of kind of this lean startup methodology. There's a great book called Lean Startup, worth reading. And it doesn't matter if you want to be, it's written for technology entrepreneurs, but it really doesn't matter what kind of entrepreneur you want to be, and the principles apply. And the key principle there is, don't worry about having a perfect product. Just get out and start selling and getting feedback and seeing if people even care. And there's so many ways to do that don't require hardly any money or any money. For example, and it don't even require you to have the product built. And so when I meet with entrepreneurs that are like, hey, check out this great grand idea I have, my first question is, have you gone out and tried to sell it yet? And usually the answer is, well, no, that's why I'm raising capital so I can build it. And then I respond and say, like, look, let's think about all the different ways that you could start selling it and proving that there is a market for this before you ever spend a dime on building it. Because what you don't want to do is spend a ton of money and effort building a product, getting the patents, all that stuff, just to find out that nobody wants it.
That would be a major discouragement. Yes. So with that being said, I've got to ask this question. How do you or someone in your position as a manager of a fund feel about sites like Kickstarter?
Well, so, honestly, a little confession time here. I am very much addicted to Kickstarter because I see ideas all the time. I don't know if most entrepreneurs realize this, but I would say most VCs, good VCs, venture capitalists, when they meet with an entrepreneur, they've got a lot of respect for the passion and the energy and the ideas that they have. And if I could, I would invest in a lot more deals than I can currently. I invest in maybe 1 to 5 of every 100 deals I see. But if I could, I would probably invest in like 30% of them because I just think what people are doing is really exciting. And Kickstarter for me kind of fills that need where I can see all these cool ideas and I can give them, money, and it's not a huge deal, and see them grow. But from a traction perspective, which I think is what you're more interested in getting at, I think these sites are phenomenal. You can put your product out, you can explain it to a certain extent. All you need is a very basic prototype to start selling in a video that you throw together, and you can then go out and start pre-selling your opportunity. And it's not all like gadgets, like, the Pebble watch or the coolest cooler. It can be things like, I just connected with this gal that's doing a journal, and it's kind of an organizer, planner journal, helps you map out your goals. And she's raised over $200,000 on Kickstarter for her journal. So I think there are a lot of interesting things you can do, regardless of kind of what type of entrepreneur you want to be, through these different platforms. I think they're super interesting.
So here's probably the we'll call it the $18 million question in your case. When I run into a number of people who often say things to me like, I would do this, whatever this is. I would start a business. I would do more real estate. I would do this. I would actually take on my life and begin to live on purpose as opposed to default. But there's no money out there. I can't find the money. I would love to hear what you would say to a person who has that particular frame of mind.
So there is always money for ideas and investments that have a chance of returning more capital, right? That have a good chance of doing it. And so your challenge is not necessarily finding the money. The money will find you. Your challenge is figuring out, how do you craft the right story? And so part of that story could be like, go out and prove that there's a need for this in the market, right? One of the techniques that I think is super easy and doesn't cost hardly any money, most people can afford, is design your product, throw together a website that sells it. You can do that through things like Shopify. It costs you $15 to throw up a full e-commerce website, and then buy $50 worth of Facebook ads to promote it, and see if people actually, you can target your Facebook ad just to the exact market you think would be interested, and see if anybody comes through to your website and tries to buy. You don't actually even have to supply the product. You just send them an email and return their money and say, we ran out of stock, and we'll let you know as soon as more comes in. But you can do things like that are very cost effective. You can test your market and then collect a bunch of this data, and then go to an investor and say, look, tell them the story, right? Show them the data, show them the demand and the interest in your product and the pre-sales and whatever it is. And if you have that kind of data and that kind of traction, I guarantee you there's money out there that will help you along your way.
I love how you just you did that. You just gave away like one of our most super secrets right there. That's awesome. Because at the end of the day, if you can't find a buyer, even if they are existing, even if they're out there, but if you can't find them and they're not willing to deal with you, it still doesn't matter. And you guys, I love that strategy because it helps avoid so much wasted time and risk and waste. And what was that? That was like, what, $65 you just said we could do that? That's awesome. I love technology for that specific purpose. So with that being said, is there a particular, I know for me, we have our favorite types of real estate that we like to look at. I'm assuming for you have a favorite type of, business that UVF prefers or Accenture. What is that target entrepreneur or business that's in your mind that go, man, I hope today I find one of these?
So I'm a big fan of what's called a SaaS business.
Oh, okay.
It's SaaS, and it stands for Software as a Service. And the basic idea is that instead of selling like a CD with software on it or download, you sell a subscription service to that software. A lot of people are familiar with this with companies like I don't know, like if you had a pro account with Gmail or Skype or, whatever, you're paying a monthly subscription, right, to that software product. Those are the kinds of investments that I get excited about and try to go after and find, because they've got just really good recurring cash flows to them, and they're very predictable, right? So like once somebody is signed up for one of these services, especially, if it requires them to invest a lot into it, as in, they got to upload all of their contacts, or they have to upload their financial information, or whatever it is, they tend to just stick with them. And so you can predict pretty far forward your kind of lifetime value of your customer. So it makes the business really nice because you've got really strong cash flows coming in. You've got really good predictability in the business, and there's strong incentives to keep growing it and adding more cash flow to the bottom line. So those are the businesses I get most excited about. And you don't have to be venture backed to start a SaaS business. I know lots of SaaS businesses that are small and serve a very interesting niche that do very well. And I know, we're investors in some of the biggest SaaS companies in the country. So there's kind of a wide range there, but those are the ones that right now get me the most excited.
No doubt. As you were talking, I'm sitting here thinking about how many monthly subscriptions are we paying right now? Yep. I get where he's coming from, because nearly everything we do requires some sort of, that what you just said in terms of being able to test out your product idea with Shopify is an example of exactly what you're talking about. But because it's only $15, of course, it's not that big of a deal to go out there and start testing it. But if you start building that traction, you're not going to suddenly close shop for that. In fact, you're probably going to upgrade to some other bigger plan that they have available, and you're going to be there for quite some time. So I definitely I like that. I like that a lot because I get excited about business and anything that can produce cash flow in various different ways. So here's the question, I guess. What would you, because let's just say that to some, you might, they're thinking, how on earth could I do this, investing thing? How on earth could I even have a shot at this? But yet, you've never said that, despite, and I'm just going to say that you're probably younger than most of your peers. Make sense? So how would many people, how would you address that person who's sitting here saying, well, I'm too young or I'm too old? Because there's probably some of both who are thinking things like that.
So, there's so many different ways that you can get involved in investing. It is a little tricky on the private side and private investing side from the perspective of there's a lot of regulations around individuals making investments into privately held companies. But there are also a lot of changes in the laws that are coming that will allow small companies to raise capital from non-accredited investors, if you will. But then there are a lot of different unique ways of getting involved as well. So you can, if you've got a lot of real estate, for example, especially if you've got some commercial real estate, there are ways where you can exchange, rent for equity and get into some of these companies. If you are an accredited investor, I highly recommend checking out places like AngelList, which is angel.co. Where you can invest in early stage tech companies alongside lots of other investors, some of which are very, very good investors. And so you can kind of ride their coattails a little bit. And those are really interesting ways. Other platforms are popping up every day. So there's a really great company called Circle Up, where if you have a consumer products company, you can post on them and on their site and raise capital from investors, but that's also another source of deal flow for individual investors. And then a lot of it is, if you're really passionate about getting involved with startups, I guarantee you in your community, there are a number of events that occur that kind of help build entrepreneurs in that side of the market. And I would just spend time going to them and meeting people and networking and learning about kind of new ideas and finding ways to help and add value. And if you can be identified as somebody that is really helpful, the opportunities will flow to you. And that's kind of what I've found throughout my life is, when I've gone out of my way to try to help somebody else, the benefits tend to come back tenfold. And they may not come back immediately.
No, they usually don't. But yes, I hear you. Keep going.
But eventually they do. And I would credit most of my accomplishments to some or a series of acts that I made to help somebody or do something or do a really good job on something that ultimately resulted in new opportunity that I wouldn't have had if I didn't take the initiative to go out and get it done and do it.
So this brings up an interesting question. I mean, if I'm looking at these sites and I'm going to these places like Circle Up, etc., and I'm considering these businesses, how on earth do I decide, which one's the good one, which one's the bad one? What's that due diligence process even look like?
So that's a great question, and we could probably spend several hours just talking. My quick feedback would be for kind of a new investor. First of all, I would say, and this is classic Warren Buffett advice, like only invest in stuff that you feel you can understand. So if it's like this genetics, algorithm, big data, problem-solving company, that may not be a really good fit for you unless you have a PhD in genetics and data analysis, right? So that's the first thing is focus on things that you kind of understand, right? So maybe you've got experience working in an office environment, right? The kinds of software that people are going to use in that office environment. And so you can then go and evaluate companies that are trying to sell software to those types of offices, right? So everybody's probably got some experience that they can use to evaluate investments. So that would be the first thing, is focus on things that you can understand. And then the next thing is, and I'm biased again, is look for clues that point to the fact that the company has figured out this idea of product market fit, as in their market and their product fit together. There's demand for their product, and that can be demonstrated through data, like the different techniques we talked about. It can be demonstrated through actual sales and traction, and in some cases, that it's not easy to do that, but it can be demonstrated through pre-orders or through interviewing customers or other things. So that's kind of the next place I would focus on is does this product really fit a need in the market? And then the last thing, and I'm not saying it's not important or it's least important, but I would look at the team. So does the team have what it takes to actually pull this off and achieve the full potential of the company? And VC investors are very, very common in saying that they look for they would rather invest in a BID idea operated by an A team than an A idea operated by a B team. And so you just want to focus on those people. Do they have the right skills, the right passion, the right attributes to make them successful in running that business? And do they have the right people around them to make them successful as well? So those are, from a very high level, those are the kinds of things I would look at. And then, beyond that, there's a whole bunch of other things that you could look at.
Beyond that, there's another 4 weeks of work.
Right.
Got it.
But those three are good places to start for sure.
Totally understood. So if, having listened now and invested here with your time with the Cashflow Diary audience, I'm sure there's an individual or two who may be at this point going, you know what? That's it. I'm ready to become this entrepreneur. I want to do this thing and make it happen. And that's good. But where is the best place for any of us to catch up with you and what you are up to and what you've got going
on? So we're in a bit of transition with our fund, which, so what I would say is, feel free to check me out on LinkedIn and message me if you want to connect. My LinkedIn address is just linkedin.com/PeterHarris1. And that's probably the best way. And I've got some really exciting news for our next fund that we'll be announcing, in a month or so. So you can kind of follow my news and what we're doing there. And, happy to help however I can.
All right. So for that person who's got the courage now, or at least is feeling like, all right, I'm going to make this happen. I'm going to put on my superhero tights and outfit for the first time in my life and go make this thing happen. What would you have to say to them?
I feel like most of the time, everybody's got great ideas, right? And, it's all of these different things that hold them back. I would say just start doing it, right? Take that first step. Figure out what that first step is, and then take it. And sometimes that first step, not only do I do venture capital and do I do this stuff internationally, but I've also got a number of side businesses that I've run with some friends. And for us, the first step was just, hey, let's get together, let's brainstorm some ideas, let's come up with one that we like, let's go test it and see if we can start something. And that's a pretty easy first step. And so I would say just, take that first step. Think about, how can you address the issues that I talked about from the investor perspective, right? For yourself, right? What things are you good at? What are different ways that you can prove that there's demand for your product? And those ultimately will provide you with that first step, and then just take it, because you really don't have anything to lose by taking that first step, and it can put you on a really interesting path.
Yes, the downside is very, very small at that point. That's for sure. Well, Peter, I definitely appreciate you taking the time to invest here with the Cashflow Diary audience.
It's been my pleasure. This has been a lot of fun.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. You have heard many resources, many websites, many books. Maybe that's your next step. You just said it. You just heard it. This is what you're going to do. Your next step. Whatever that next step is, let's go out there and take it. Let's make it happen, because nothing happens until there's a sale.
And I look forward to talking to you soon. Until next time.